Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. A very mixed 24-hour session comes through again for the Australian dollar. First of all, we had a previous late last week of an outside range day on Thursday, a bullish rally on Friday, and now another bearish price action in the last 24 hours. What is interesting to see is the fact that the market is clearly backed away from the top side range of 74.55.65 and now looking back towards the downside with the target holding it around 73.40 and down to 72.55.60, which is still seen as a potential base for the Australian dollar. Any movement above 74 cents or towards the region of 74.55.65 is still regarded as a potential sell for the pair. The US dollar is clawing its way back from the recent lows of 93.95 and currently it slightly stays a better stance this morning at 94.30 in New York. Nevertheless, it has given us opportunity to short the market yesterday, with the rally above 117 gave us a brief look towards that resistance of 117.40.60 before dropping away. It is viewed that further weakness will come back into the euro, and I'm looking at 116.70 to 116.20 and eventually down to its target of 114.85. If we do see any movement above 117, I still regard it as a sell opportunity. The sell-off yesterday for dollar yen rebounded clearly off this trend support line at 110.75. From the bounce, though we're still not quite out of the danger zone. From a technical point, it's still a little bit on the heavy side. Nevertheless, we should still see further challenges from the bullish case if revisited. I expect to see the market look back towards the top side of the range that comes in somewhere around 111.55 to 111.85. Reassess from there. The British pound loses its footing again overnight and backing away from this resistance of 132.05.20. It is viewed that if you are trading the British pound, you still have to be on your guard due to the uncertainty of the Brexit, along with the fact that the British Prime Minister's government is still fragile after the two resignations by Boris Johnson and also from David Davis. Nevertheless, I'm still holding the target of 128, with the immediate target seen towards the region of 129.60 and sell rallies towards 132.05. The gold case lost also its footing with a slightly firmer US dollar overnight. And the fact is that losing $10 has now caused a little bit of concern from a technical point that the market is failing. Nevertheless, the safe haven demand is likely or could return after President Trump hit back against Iran's counterparty Hassan Rouhani, who said hostile US policies towards Tehran could lead to the mother of all wars. Elsewhere, other metal traded mostly lower as aluminium prices held, but copper and zinc futures remain under pressure as investors continue to fret with the US trade war tensions. After the US Secretary Stephen Mnuchin turned around and further said that sanctions on China could come into effect. It's definitely a realistic possibility. Mnuchin said that Trump's following through on a threat to impose tariffs of up to $500 billion worth of goods the US imports from China each year. If we do get weakness, let's see if the market can hold above 21, or if so, the base is still holding around 10.12, resistance seen at 29 to 33. And wrapping up with oil, I'm still bearish, and a rejection clearly from $69 a barrel has put some concern on the case that the market is failing towards the top side and the bears are still in control. We also have a long-legged doji in play. Therefore, I am looking down towards $66 a barrel. A break beneath there would give further scope, and maybe even towards 62 as a target. Fresh advances towards 69, 69.5 is a sell. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.